What a year it has been. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. A happy holidays, a Merry Christmas, and here we are again. We don't stop over here because the news never stops. There are no breaks. December 23rd, 2025. What a year it has been. Massive records in gold. We have records across the board here. As I said last week, it is feeling like a rip-roaring bull market in the metals, and just turning to CNBC, I mean, it's just another day at the office here. The CNBC gold futures, $4,514.90 per ounce, and who knows what that is in Canadian dollars. You can do the math. It gets pretty wild. Silver at $69.55 on the CNBC March futures, and it's not just gold and silver. Platinum and palladium have had monster runs as well. Platinum is up 5% since yesterday, $2,196 on the March futures, and palladium is at $1,911, up 4.4% on the day. It's just another day at the office over here. I feel like we've made more records than non-records beginning this show. I try and mention them. They are significant, but wow, another week, another record. And we shouldn't take this for granted. For those investors that have been in this sector for 15 years, I mean, it's been pretty slow going and a pretty hard wait. It's a lesson in investing to a certain degree, you know, what has happened here in the metals, because it was getting pretty dour out there. I mean, nobody can forget 2015, but even later, you know, it was as recent as, 2019, 2020, when all we could talk about was how we can improve the image of the mining industry, ESG. And what's so interesting about this is, in a sense, all of the branding around the environment, all of the branding that we're good people, to a certain degree, it was utterly eclipsed by the economic necessity, in a sense, one could argue, national security of all of these countries, which is tied and intertwined with economic security, but that ultimately, all of this discussion, which was necessary and which was good, this is one of the most aware industries of its responsibilities as corporations in contemporary society, I would argue. Perhaps even more so than the tech industry. You see, the latest out of Facebook, what was it? Basically making money off of scam accounts and just charging them more for advertising, allegedly. So it's quite interesting. I'm kind of back to the cyclicality of this whole industry and of life in general. It's a deep and profound lesson in cyclicality. All things shall pass. This too shall pass. This bull market shall pass. However, it may be a few years before that happens, but nevertheless, it is a deep, profound lesson that frankly goes far beyond the mining industry. Now, let's take a look here as we begin our holiday show, and let me just mention now, we have a wonderful show. This is for true lovers of this industry. Of course, they will know Pierre Lassonde, the co-founder of Franco-Nevada, one of the great mining companies, one of the pioneers of the royalties model. And we have Pierre Lassonde, who won the Northern Miners Lifetime Achievement Award. We have his speech, and we also have his interview with Anthony Vaccaro. So this goes for 40 minutes, our feature content here, and it is a delight. Franco-Nevada's Pierre Lassonde, who won the Northern Miners Lifetime Achievement Award, which was presented to him at the International Metals Symposium in London, England, earlier this month. Was that only 3 weeks ago? I mean, that is another thing about this year. When I think of everything that has happened this year, what a wild year. You think back to February and it feels like 10 years ago. Even this conference. That was only 3 weeks ago? It feels like 6 weeks. Now, turning to our stories here, let's take a look. And here is the latest. Gold tops $4,400. This is yesterday. So this is the kind of year it is. Gold tops $4,400. You could update that. Gold tops $4,500 as silver hits $69 record. So what is driving this? We look at these records in the metals, and it seems like it is more than one factor that is driving this. There are several things going on. I mean, we cover the bond market very lightly here, but we do cover 10-year bonds for a lot of the major bond markets. And one of the big things we're seeing is the Japanese bond market. And when I go to CNBC here, click on bonds and go to Japan's 10-year bond, it has broken 2%. It is at 2.03%. I believe I saw 2.07% yesterday. So we look at the bond market and we think of Ray Dalio, we think of Jeffrey Gundlach, and we think of the modification. And this is profound, I would argue. The modification of the 60-40 portfolio. We are seeing major hedge fund managers, arguably some of the elder statesmen, so to speak, again, Ray Dalio, Jeffrey Gundlach. These aren't necessarily gold permabulls. These are, respected and admired as some of the most important investors and minds in investing. And they are buying gold. And they are coming out with incredible numbers here. Basically saying diversify out of the bond market, keep your stock allocation, but your bond allocation, you can basically cut in half. That 40%, you can turn into 20%, and the other 20%, you may want to get gold. That is quite something. I mean, Jeffrey Gundlach, as I was saying in the interview with Rick Rule, in September was saying, 25% gold in your portfolio is not excessive. This is shocking. You have Ray Dalio, 20%. So this is a paradigm shift. And it's coming at the expense of bonds, interestingly. So that is one factor. It is not the only factor, though, because this diversification towards, as Jeffrey Christian puts it, a bull market in real things, this diversification that is happening here, there is more than one cause, I would argue, were we to try to start allocating causes. The other, major factor, I would argue, is underinvestment in mining. It has been a hated industry, circling back to the change we've seen. As Pierre Lassonde will say, to say you were in mining not that long ago was to basically say you were, as he put it, quote, a turd on someone's shoe, end quote. And again, like I saw it, I was in Berlin at the time. You didn't mention that you're in the mining industry in 2016. I was recently in Berlin, and I'm telling you, at an art opening, it's the exact opposite. You're the toast of the town. Literally, the models are coming up and saying, oh, well, I'm studying the supply chain. That is so cool. You are involved in metals. Again, we are back to this cyclicality in these markets. And of course, what's interesting about it is you could say, oh, well, okay, the bond market. But there's not just that. Then, as a result of this underinvestment, and potentially as just a structural function of grades declining, there just isn't as much metal that is, you might say low-hanging fruit. So there is a supply issue, which we're starting to see come on strong in metals like copper and silver, which are hitting records. And to a certain degree, you feel like copper's just getting started. As you're going to hear Pierre Lassonde say, you can't build a modern city without copper. You can't do anything. You can't build an elevator. You can't build it. The copper rails make it happen. It is a necessity. So this is where we are. And the final point I'll put on this is that for most of my adult life, we've been in an era of financialization. Since the late 90s, in a sense, the rise, one might say, of paper assets. Right? And what we're seeing, again, to return to Jeffrey Christian, is that paradigm is starting to run out of gas as we start to hit critical shortages. Whether it's rare earths, arguably the biggest story of 2025, with all of its geopolitical, economic, and military implications, or it's cobalt, which has seen restrictions, and now there's concern in the coming months that there's not going to be enough cobalt for China, which has been stockpiling, and we do have an update on that. Furthermore, there is the processing facilities. And one of the great ironies of this year, as we take a step back, has been for all of the discussion, for all of the desire to act by Western governments. We are seeing smelter after processing facility after refinery of metals either close or threaten to close. And that is quite something. We're seeing it with copper smelters, especially in Germany, where they're running out of scrap. And what is the problem, say, with aluminum, is these things are incredibly energy intensive, right? And energy, oil is cheap right now. One of the scary things that could happen here, you think of Rick Rule saying oil is the biggest no-brainer for the next 5 years that he's ever seen, to paraphrase. You think of that, and you think, what is going to happen to our costs of energy if oil goes up? People are comparing gold and oil and saying, look at what's happened to gold. It's time for oil to make a catch-up move. And I think of Jeffrey Christian when I say this, when he says, I hate the gold and silver ratio. But there is something to be said for these ratios, isn't there? And I see where he's coming from. But nevertheless, if gold goes to $5,000, don't expect silver to stay at 20, one could say, right? So there is a correlation of sorts. And so when you think of oil, it gets a little concerning should gold not come down. So lots going on here. Let's take a look at the headlines. Here is Bloomberg News via mining.com. Copper price nears $12,000 as base metals stage broad rally. And I was describing it earlier this year, where I was speculating out loud saying, is gold the general here? And we're about to see the rest of the army follow suit once gold started running. And gold did seem to be first, didn't it? I mean, there's the odd metal that was breaking out, but gold did seem to lead this bull market in the metals. And it's almost as if the metals are taking their turn. Silver seemed to come next, and now copper is taking its place. What is next? And so that is what goes through my mind when I see base metals stage broad rally. Let's see what it says. Copper neared a record high with a renewed rally in U.S. tech stocks, helping to boost investor sentiment at a time of tightening supply in many metals markets. And this is another super interesting point, which is the increasing connection between technology and the metals. That is really one of the big takeaways and changes we've seen here this year. That has been finally recognized. Continuing on, prices for the bellwether industrial metal rallied as much as 1.3%, and this was posted on December 19th to $11,928 a ton, within $25 of an all-time high and nearing the $12,000 mark. Prices have climbed by more than a third this year, bolstered by mine outages, a surge in U.S. imports, and a bullish outlook for usage linked to artificial intelligence. Tin, another crucial metal for the tech industry, has rallied nearly 50% this year and hit a fresh 3-year high on Friday amid renewed gains in AI-focused stocks. Aluminum also reached the highest price since 2022, with the looming shutdown of a smelter in Mozambique adding to worries about supply as plants in China face a cap on output. Nickel advanced for a third day, extending its rebound from an 8-month low on the prospect of reduced supply from top producer Indonesia. The metal rose as much as 1.6% on Friday, 2 days after Indonesia proposed cutting nickel ore production in 2026. Something that was predicted at the International Metals Symposium. And scrolling down, we have a quote from Bernard Dada, an analyst at Natixis, who said in an email, quote, going into 2026, if the cut does take place, then our view is that nickel is likely to outperform the rest of the base metals complex. Most metals in the complex have already reached record highs, and as such, the price increase momentum is likely to slow down, if not reverse in some cases. So, analysts getting bullish on nickel. Continuing on, we have an interesting story in the Financial Times, the American company seeking to counter China in Africa. Ivanhoe Atlantic's Liberty Corridor would supply iron ore to US and allies, but face opposition in West Africa and Washington. So we've heard of the Libido Corridor. This, they're calling the Liberty Corridor. About 160 kilometers from Simandou, a Ghanaian iron ore mine whose $23 billion price tag makes it the world's biggest mining project, lies another reserve of even higher quality, Konkweni, a deposit owned by U.S. company Ivanhoe Atlantic in the forested Nimba Mountains of southeast Guinea. Will Robert Friedland do it again? Ivanhoe Atlantic, founded by American-Canadian mining billionaire Robert Friedland, has positioned its mine and rail project as a Donald Trump-endorsed alternative to China-led Simandou, pledging to deliver high-grade iron ore into Western supply chains. Bronwyn Barnes, president and chief executive of Ivanhoe Atlantic, said the $1.8 billion project, which Ivanhoe has branded the Liberty Corridor, would, quote, help counter China's tightening grip over critical minerals. Ivanhoe intends to transport the ore at 66.5% purity among the world's finest through neighboring Liberia to avoid using the recently built 600-kilometer Chinese railway connecting Simandou to mainly Chinese mills via a Ghanaian port. Quote, every ton we produce is reserved exclusively for U.S. and allied supply chains. None will go to China, Barnes said. Ivanhoe's attempt to wrap itself in the American flag shows the extent to which commercial deals in Africa have become embroiled in U.S.-China rivalry. But it is a tricky thing to pull off when global capital is increasingly hard to disentangle, and when African governments, wise to superpower sparring, are seeking to play off competing suitors to strike better deals. In recent days, Ivanhoe's claims to be an America First project have run into problems both on the ground in West Africa and back at home in the U.S. In Guinea, some officials have balked at an agreement made by a previous government to allow Ivanhoe to export its ore in Liberia. In Washington, a roughly 30% Chinese stake in another Friedland-founded company, Canada's Ivanhoe Mines, has made Ivanhoe Atlantic the object of political suspicion. What's interesting, too, when you look at the map here in the FT's article, is the railway for the Liberty Corridor is quite short, looking like maybe just over half the length of the Trans-Guinea Railway. Ivanhoe says it is ready to start shipping ore in the first half of 2027, an ambition that inched closer this month after the lower house of Liberia's parliament ratified an agreement to allow Ivanhoe to share a railway currently used exclusively by ArcelorMittal, the Luxembourg steelmaker. Some Liberian officials still worry about upsetting ArcelorMittal, the country's biggest investor. It is wary about the practicalities of sharing a railway that transports its own iron ore and in which it has invested $800 million. Paul Way, ArcelorMittal's head of communications, told the Financial Times the railway was, quote, available for others to use, providing they invest directly to develop additional capacity. One senior Liberian official speaking on condition of anonymity cast doubt on Trump's backing for Ivanhoe Atlantic, saying that when Liberia's President Joseph Boakai met the U.S. president in Washington in July, Trump appeared unfamiliar with the Liberty Corridor concept. Quote, they made it look as though it was something Trump wanted, the official said, referring to Ivanhoe and backers of the project. Quote, but when the president reached the U.S., he realized the Trump government was not really involved. So it'll be interesting to see how that all plays out. Continuing on, Congo collects samples for CMOC's first cobalt shipments, sources say. So CMOC, of course, is a Chinese mining company, and Congo has reduced exports on cobalt, and my suspicion here is that the DRC was getting increasingly concerned that CMOC was flooding the cobalt market and that China was stockpiling on the other side. Now, that is pure speculation on my part, but surely that had to cross their mind as they're seeing the market being flooded and China stockpiling. You know, and to China's credit, I think it was $8 a pound. Now it's somewhere around 21. let's just take a quick look. The Democratic Republic of Congo has begun collecting samples in preparation for Chinese company CMOC's first cobalt shipment under a new quota system, expected to take place in the coming days, two government sources told Reuters. Congo accounts for more than 70% of global mined cobalt production, that is estimated by analysts at around 280,000 metric tons this year. But a months-long export ban has driven cobalt prices sharply higher and squeezed availability of the metal needed for electric vehicles. The new system, launched on October 16th, has allocated a quota of 18,000 metric tons for the fourth quarter and will cap annual exports at 96,000 tons from 2026, and that is down from 280,000 metric tons, so about a third. Reuters reported this month that Glencore would be the first miner to export cobalt under the new quotas, sending a small shipment to test the system. CMOC and Glencore, the world's two largest cobalt-producing companies, received the largest allocations. CMOC's quota for the fourth quarter is 6,650 tons and Glencore's 3,900 tons. Like Glencore, CMOC will pay a 10% royalty, the Congolese government sources said. So, interesting development there. Another headline, China's rare earth magnet exports to U.S. decline in November. That's Bloomberg News via mining.com. You know, as I keep saying here, and as is pointed out sometimes in the media, occasionally, this is all about the heavy rare earths. The real bottleneck here is the heavy rare earths, which basically China completely dominates. It's like 98 to 99%. Shipments to the U.S. totaled 582 tons compared with 656 tons in October. We don't know what that means. It says rare earth magnets. We don't know if that's heavy rare earths. We don't know if that's light rare earths. So this is Bloomberg News via mining.com. I hesitate to say, and it may not be the fault of the reporter, I'm not sure what this tells us, other than the fact that rare earths declined, but that could mean so many different things. If they're exporting mostly heavy rare earths, to a certain degree, one could say exports are up. So, unclear. And following up on the India-Myanmar issue, of course, Myanmar feeding a huge amount of the heavy rare earths to China to be processed. So a very important country. And there's an allegation last week that we're discussing, actually the last few weeks, that India has made a deal with the rebel Kachin Independence Army in Myanmar to build a road in order to basically truck rare earths to India. And we have a couple of headlines here, and this is BNIonline.net. Keo denies report of secret rare earth mining deal with India. So Keo, the Kachin Independence Organization, which is the political wing of the Kachin Independence Army, or KIA, said reports claiming it had signed a secret agreement with the Indian government to extract rare earth minerals are false. So the KIA, or the Keo, are completely denying this. And also, we have a story from the Irrawaddy. India, Myanmar talk closer military ties, post-election opportunities. And now India is reaching out to the military junta. India's ambassador to Myanmar, Abhay Thakur, and military attaché Jaswinder Singh Gill met Myanmar's military number 3, General Kyaw Swar Lin, in Naypyidaw on Monday. The regime said talks covered reciprocal military training programs, border security, stability, and expanded cooperation between the two armies. The discussions touched on better opportunities expected to emerge after Myanmar's year-end election, they added without specifying. Scrolling down, it also follows reports of a covert agreement between India and the KIA over rare earth mining in northern Myanmar. But there was no indication whether the issue was discussed at Monday's meeting. So one imagines, though, India sent over an ambassador to the military junta to calm the storm. Because, of course, China is the elephant in the room here, looking over at what's going on here. And I can't think of an easier way to annoy China than for India to build a road and support the rebels. China is supporting the military junta. And if India comes out there and supports the KIA, or the rebels fighting the military junta, or taking the other side of the civil war that China is on, surely that will not lead to good things. So India taking some action, sending over some officials to calm the waters. And final headline, Paris prosecutor opens investigation into missing uranium in Niger. So Paris is not letting this one go. A Paris prosecutor has opened a probe into organized gang theft. So they're concerned about this uranium. And that is modernghana.com. So lots going on in this big, bright world here at the end of 2025. And a wonderful show ahead of you. You have Pierre Lassonde receiving the Northern Miner Lifetime Achievement Award. And coming right up, we have Fred Ernest, President and CEO of Vista Gold, who discusses the company's Mount Todd project in Australia and everything that is happening at the company. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Fred Ernest, President and CEO of Vista Gold, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Fred Ernest, President and CEO of Vista Gold. Fred, welcome to the show.
Thank you. It's good to be back.
It's great to have you back. For those that are unfamiliar with Vista Gold or haven't heard from the company in a while, what's new at Vista? Could you give us a little bit of background on the company?
Yeah, absolutely. We're a U.S.-based company with a major project in Australia. We trade on the NYSE American and the TSX stock exchanges under the symbol VGZ. And the project that we have is the Mount Todd Gold Project. It's one of the largest undeveloped gold projects in Australia. In fact, it's the second largest, and it's also the largest undeveloped gold project not in the hands of a producer at this point in time. We have owned the project since 2006. We've tripled the resource, and we've done an extensive amount of engineering work. And this past summer, we completed a new feasibility study for the project, rethinking the project at a scale that we think is right-sized at 15,000 tons a day.
How interesting. And so I imagine, the price of gold has changed significantly since the last time we spoke. I assume that changes your project somewhat, doesn't it?
It really does. You know, the Mount Todd project enjoys tremendous leverage to the price of gold. I think that's best summarized and just demonstrated by the feasibility study results. We used a $2,500 gold price, and the economics of the study were an after-tax NPV5 of $1.1 billion with an IRR of 27.8%. And we also published an evaluation at $3,300 an ounce, which is still far below where we're at today. And the economics jumped to an NPV5 of $2.2 billion, or a double, and an IRR of almost 45%. So I think those numbers at a gold price much lower than where we are today clearly demonstrate the leverage that we enjoy, and also kind of highlight that, this is a great project at much lower prices, and today it just makes it look so much better.
Okay, excellent. So where are you then in this project? You mentioned the feasibility study. Have you more or less drilled out everything you want to drill out? Is there more drilling to do? In a sense, where do we stand on the Mount Todd project?
Yeah, so we own 1,600 square kilometers of exploration licenses. And we've identified a large number of targets, well over 20 targets that at some point we would like to explore. But the resources that we report, in total about 10.6 million ounces, are all found in the Batman deposit and a small satellite deposit just 5 kilometers to the north. There will always be more exploration to do, but we've kind of made the decision that with a resource of this size, that there's really not a lot more drilling to do to grow the resource in order to develop the project. We've got a resource, we've got a project that's well-defined, and so we're turning our attention to how do we advance the project and move it toward a project development decision.
It's interesting. The more I talk to people with projects in Australia, they do have a culture out there in Australia of almost building much sooner, is my impression. Is that right? Does that apply to you?
It really is seems to be an Australian trait that they're quite comfortable starting construction and developing projects with a much shorter mine life than what we're accustomed to doing here in North America. It seems that they're willing to take a little bit of a gamble on being able to grow the resource once they get things built and in operation. And they certainly are more anxious to move things into the construction development phase than we typically are as North Americans.
Okay, excellent. And so Mount Todd is in the Northern Territory. Do you have all the permits and all the infrastructure that you need over there?
Previously we had designed this project as a 50,000 ton per day operation and had obtained all of the major permits to build the project as it was designed in 2019 at that scale. With some drilling that's happened in 2020 through 24 and the changes in the new feasibility study, there are some minor modifications to those permits, and we've commenced the process of obtaining the authorizations with those modifications in place. We've already filed the documents for the modification of our environmental impact statement. We'll be filing the documents related to updating our mine operating permit sometime the latter part of January. We have filed for an additional Aboriginal Areas Protection Authority certificate. And so all of that is in process. We've had some rather straightforward conversations with the agencies and the regulators. And right now, it looks like sometime late next year, we will have all authorizations in place to be able to move the project to the construction and development phase.
Indeed, it's not the stumbling block that it used to be, is it? As I like to say, there's never been a better time to be a miner these days or to be in the mining business. So it looks like you have a lot underway. You have the feasibility study. So where is this going, Fred? How do you see this playing out from here?
Yeah, well, like we were just talking about, getting the permit modifications in place, getting those authorizations and approvals granted, that's a huge priority for us. We're moving toward, and our objective is that about the time that we have all of these modifications and approvals in place, to be able to start detailed engineering and design for the project. We've begun the process of looking for people to begin to build a core project development team based in Australia. So those are really the three key activities. One is getting final permits in place. Second of all is building team. And third is positioning the project, doing some of that background work that we need to be able to have completed in order to be able to pull the trigger on a decision to march down the path of detailed engineering, which will ultimately lead to a decision to build and construct the project.
Okay, excellent. So in other words, if I was to summarize here, once you have all of your permits in place, you want to start building this mine. You actually want to build the mine and then potentially expand. Is that basically how you see things ideally playing out?
That's an interesting question because we've designed the project, we've rethought the project. We've scaled it at 15,000 tons to lower the initial CapEx, and that's resulted in a 30-year mine life. We all recognize that this isn't going to be, as the project is known today, a 30-year mine life project. We've not planned the expansion, but we fully expect there will be one. And so once the project is up, running as it should, we expect that there will be a lot of work done to evaluate what that expansion should be. And we've allowed for the space around the process plant for that expansion to occur, whether that's a 50% or 100% expansion, and whether it happens in year 3 or 5, who's to say at this point? But we certainly expect that there will be a point where there will be an expansion of the project. But that the primary goal right now is let's do all the work that we need to do to get this project through the construction phase, transition it to becoming a producer, recognize and realize that uplift, that change in valuation that comes when you become a producer, and begin to really generate value for shareholders. And then we'll talk about expansion.
And just in terms of financing, then, do you have all the financing that you need in order to build this out then? How are you feeling in terms of financing?
Well, certainly, we've not gone down that path yet. We reported $13.7 million at the end of the last quarter, and that's nowhere near enough money to build the project. As we get closer to making a decision to commence detailed engineering and design, financing will become more of a priority for us. We've already begun having conversations with banks most of them in Australia. Many people will know that we have a relationship with Wheaton Precious Metals. There will be a point where we will begin to put those instruments in place, but that won't happen until the latter part of next year.
Okay, excellent. So as we wrap up here, Fred, what is your message to investors? What do you want them to know about Vista Gold and the Mountain Todd project?
The Mount Todd project is, like I said, one of the largest undeveloped gold projects in Australia. It's been redesigned. We think that at the scale that we now are envisioning Mount Todd, that this is the ideal place to start. It's a great entry-level size. Vista is undervalued when we look at the valuation of our peers in the junior gold mining space in Australia. We see an opportunity for there to be something between a 5 and 15 times increase in valuation as we transition from being a developer to a producer. I think that I would like people to know and understand that when we talk about, permitting, this is a process that takes, in many cases, more than 5 years. And we're at a point where within the next 12 months, we'll be ready to break ground. And I think that those are important facts to understand. We enjoy great community support. We enjoy great support from the Aboriginal people in the project area. And we're excited. We've seen tremendous value creation this year as the price of gold has started to come up. We think it's a great launching point, and we expect that we'll be able to see continued value creation for shareholders as we move forward with our plans to advance Mount Todd. That's what I want people to realize, is that there's a real value creation opportunity here, and we hope to be able to lock that in and deliver that for our shareholders.
And that is VGZ on the New York Stock Exchange and VGZ on the Toronto Stock Exchange. Fred Ernest, President and CEO of Vista Gold, thank you for joining us and telling us all about what you're working on at the company.
Thank you very much for having me.
Thank you once again to Vista Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit vistagold.com. Turning to the website, we have a big update with Korea Zinc. Of course, a strategic smelter in Korea, the world's biggest zinc smelter, but they also produce critical materials like germanium and gallium. And what we're seeing, a parallel story we've been watching, is the shareholder and board fight for control of the company. And so just last week, we heard how JP Morgan and U.S. investors are going to put $7.4 billion into a U.S. smelter built by Korea Zinc. And here is the headline. Korea Zinc shareholders ask court to block share sale and $7.4 billion U.S. project. That's Reuters via mining.com. Two major Korea Zinc shareholders asked a court on Tuesday to block the company's plan to sell new shares, part of a scheme to help fund a $7.4 billion U.S. smelter, which would be built in partnership with the U.S. government. The filing for an injunction with the Seoul District Court threw doubt over the project and sent shares in the world's largest zinc smelting company plummeting 14%. A day earlier, Korea Zinc unveiled a plan to build a U.S.-based refinery for zinc and other critical minerals, an effort that would help the United States cut reliance on China for key materials used in manufacturing, electronics, and weapons. The shareholders, Yongpung conglomerate and private equity firm MBK Partners, said on Tuesday they were not opposed to the construction of a U.S. smelter per se, but they objected to the proposed issuance of new shares worth $1.9 billion to a joint venture backed by the U.S. government and unnamed U.S.-based strategic investors that would give the investors 10% of Korea Zinc. That, in turn, would dilute their holdings and help Korea Zinc's chairman cement control of the firm. So that is on December 16th. Then we have a headline on December 19th. Korean proxy fight threatens to derail Trump's big zinc bet. It's Bloomberg News via mining.com. The Trump administration's investment in a U.S. zinc development has thrust it into the middle of a South Korean proxy fight. An example of how the government's push for equity stakes in critical industries is facing free market blowback. Scrolling down, critics say the administration's methods, which include taking direct stakes in critical minerals producers and other firms in sensitive industries, put their goals at risk by inserting the government into business dealings outside of its control. Quote, "This does seem to be the first of these deals where there's a material risk that the thing won't close," said Peter Harrell, a former Biden administration economic advisor, now at the Carnegie Endowment for International Peace. Quote, "I do hope that they understood what they were getting into, and didn't just get blindsided by this. The White House Commerce Department and Pentagon did not immediately respond to requests for comment. U.S. officials, speaking on condition of anonymity, expressed cautious optimism that the deal will ultimately proceed and said it would reinvigorate domestic production of key materials used in defense, aerospace, and other sectors. The problem that MBK and Yongpung conglomerate will face is they're facing basically the U.S. government. And it seems to me that the way this deal was structured was no accident. The whole point of doing what they're doing is really to kick out Yongpung and MBK from being any more of a problem. To editorialize, that is what's going on here. So I suppose we shouldn't be surprised to see this happen. Again, the biggest problem they're going to face, maybe they succeed in court. That is their only hope, because otherwise they are facing the U.S. government and potentially their own government. This smelter is strategic, and so I don't see how some, investors, frankly, are going to start trumping the Pentagon. Continuing on, Korea's zinc plan to build U.S. smelter would benefit South Korea, minister says. So even the South Korean government is on side here. So it'll be interesting to see. Can a judge stop this? Can a judge stop this? I would say no. And that one way or another, this deal will go through. And this is Reuters via mining.com. South Korea's industry minister said on Wednesday that Korea Zinc's plan to build a U.S. smelter would help develop supply chains for critical minerals, and added that Seoul could discuss whether the plan might receive support from a U.S. investment fund. Korea Zinc on Monday unveiled a plan to build a $7.4 billion critical minerals refinery in Tennessee that will be largely funded by Washington. Quote, "We see it as a positive move for Korea Zinc to make this strategic decision despite the financial burden," Industry Minister Kim Jung-kwon told a press conference. Quote, "We concluded those plans from Korea Zinc will help the country build stable supply chains for rare earths," Kim said. So again, good luck blocking this. These shareholders are fighting major forces. And this is what I've said from the very beginning. They're never going to be able to take it over because this asset is too strategic to be put in the hands of some unknown quantities, is really what it comes down to. It's simply too important. Continuing on, U.S. Development Finance Agency targets AI minerals in expansion. This is Bloomberg News via mining.com. And so here we hear from the U.S. International Development Finance Corporation. A U.S. development finance agency that's on track for a tripling in funding aims to invest in data centers for artificial intelligence as well as critical minerals and energy, according to a top official. The U.S. International Development Finance Corporation will focus on projects in Latin America as well as wealthy nations like Canada and Australia that had been outside its remit, Connor Coleman, the DFC's head of investments and chief of staff, said in an interview. Quote, "You're going to see us moving at a much faster pace heading into the new year," Coleman said. Created under the Trump administration, the DFC has emerged in his second term as a key tool in his push to harness U.S. economic and business interests in foreign policy. The DFC's financing capacity will be increased to $205 billion from $60 billion, and the roster of countries where it can operate will be expanded under a bill Trump is scheduled to sign later Thursday. Trump named Ben Black, the son of billionaire Leon Black, to head the DFC. Quote, "America's foreign investments must deliver for the American people and bolster our position as the global leader of peace and prosperity," Black said at an event Wednesday. Coleman said AI data centers are, quote, "of massive importance," end quote, to the agency, citing a, quote, "digital Silk Road," end quote, to combat foreign adversaries. A digital Silk Road created by the U.S. Continuing on, a headline, U.S. raises Graphite 1 loan to $2.1 billion. This is Henry Lazenby at the Northern Miner. U.S. Export-Import Bank has increased potential funding to over $2 billion for Graphite 1's Alaska to Ohio supply chain. And we have a quote from CEO Anthony Houston, who said in a news release, quote, "There's no reason the U.S. should be dependent on foreign-sourced graphite when Graphite Creek can anchor a 100% U.S. supply chain." Another headline, Europe trawls for alternative aluminum supply in face of Moselle shutdown. This is Reuters via mining.com. A smelter shutdown in Mozambique is set to dent global aluminum supplies next year, analysts say, leaving the plant's core European Union customers searching for alternatives. South 32 confirmed on Tuesday that the 560,000 metric ton per year capacity Moselle smelter would be placed on care and maintenance from mid-March after talks with utilities and Mozambique's government failed to yield a new power deal. The plant shipped almost 430,000 tons of aluminum to the EU in the first 10 months of 2025, figures from Trade Data Monitor show, making Mozambique the top supplier of primary metal to the bloc and nearly a fifth of the region's total imports. This is a big deal. And we have a quote from ING analyst Iwa Manthi, who said in an email, quote, "We are expecting a deficit of around 600,000 tons now for next year." End quote. ING had previously seen a 200,000-ton deficit in the global aluminum market after a deficit half that size in 2025. Quote, "Europe is likely to fill the Moselle gap mainly via higher imports from Canada and the Middle East," Manthi added. Europe's demand for primary aluminum is around 9 million tons per year, Brussels-based industry group European Aluminium estimates. Finally, Moselle's impending closure coincides with an outage at Century Aluminum Smelter in Iceland, which has slashed output by 2/3 due to electrical failure. Iceland has been the EU's second biggest aluminum supplier this year. The EU's new carbon border adjustment mechanism, which will put a carbon tax on aluminum imports from January, has also pushed up prices, while Russian metal allowed to enter the EU will cut to 50,000 tons from February 26th to December 31st. So it is coming from all sides in a major metal, aluminum, for the EU. Continuing on, Ontario, Ottawa signed deal to speed up major projects. That's Frederick Temesco at the Northern Miner. Ontario and Canada's federal government signed an agreement deal that aims to curb duplicate reviews and advance long-planned infrastructure and projects such as those in the province's metals-rich Ring of Fire region. The deal will bring a, quote, one project, one review approach to major infrastructure initiatives in Canada's most populous province, the federal government said Thursday in a statement. It will ensure that both levels of government, quote, can adopt the most effective assessment process on a case-by-case basis, either by relying on Ontario's process or by implementing a coordinated federal-provincial approach, Ottawa said. Under the deal, Ontario and Canada pledged to coordinate environmental and impact assessments on major projects that would otherwise trigger separate federal and provincial processes while respecting jurisdictional responsibilities. Officials say the model will deliver major projects faster while reinforcing environmental protections. Very interesting there. Continuing on, global coal demand hits fresh high, according to the IEA. And this is Cecilia Jamasmy at mining.com. Global coal demand is set to reach a new record high in 2025, driven by higher output in the United States, according to the latest International Energy Agency report. So interesting headline there. Continuing on, Barrick officially resumes operational control of Mali Mine. That's Reuters via mining.com. Canada's Barrick Mining has officially resumed operational control of its Mali gold mine, according to a company memo seen by Reuters. So that continues. Continuing on, Lundin to sell Eagle Mine to Talon for $84 million. That is by Cecilia Jamasmy at mining.com. And another headline, lithium price surges in China after authorities announce plan to revoke mining licenses. And this is Reuters via mining.com. And so we did see a jump in lithium, as you're going to see coming up in metals prices. Continuing on, nickel price extends rebound after Indonesia signals mine output cut, and that is Bloomberg News via mining.com. So after we saw $6.48 per pound nickel last week, Indonesia is now discussing making cuts to nickel ore production in 2026. So those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.15%. That is down 0.02% on the week. The UK 10-year gilt is unchanged at 4.51%. The Italy 10-year bond is unchanged at 3.52%. France's 10-year bond is yielding 3.57%, and that is 0.02% higher on the week. Germany's 10-year Bund is yielding 2.87%. That is 0.03% higher on the week. Japan's 10-year bond is yielding 2.03%. That is up 0.08% on the week. So orange lights continue to flash in the Japanese bond market. China's 10-year bond market is yielding 1.83%. That is down 0.02% on the week. It's just another example of how hard it is to compete with China when their borrowing rates are at 1.83%. Turning to precious metals, gold is trading at $4,521 even. That is $109 higher on the week. Silver is trading at $69.57 per ounce. That is $6 higher on the week. Platinum is trading at $2,096.30 per ounce. That is $289 higher on the week. And palladium is trading at $1,793 even. That is $202 higher on the week. So precious metals rocket higher. Turning to industrial metals, copper is trading at $5.43 per pound. That is 9 cents higher on the week. Iron ore is trading at $106.92 per metric ton. That is 87 cents higher on the week. Aluminum is trading at $1.34 per pound. That is 4 cents higher on the week. Lead is a penny higher at 89 cents per pound. Nickel is recovering at $6.93 per pound. That is 45 cents higher on the week, but still below $7 significantly. Tin is trading at $19.61 per pound. That is 86 cents higher on the week and approaching the $20 mark on tin, which we haven't seen in quite a while. Cobalt is trading at $23.95 per pound. That is unchanged. And lithium is trading at $14.07 per kilogram. That is 57 cents higher on the week. Uranium is back above $80 at $80.25 per pound. That is $2.35 higher on the week. And zinc is unchanged at $1.40 per pound. Zooming out, precious metals soar with gold and silver at new highs, and platinum and palladium coming along for the ride. And industrial metals are also making good gains with copper at $5.43 per pound and tin showing a lot of strength. And those are your metal prices. Coming up, I'm very pleased to present to you Pierre Lassonde, who is receiving the Northern Miner Lifetime Achievement Award at the International Metals Symposium in London, England, earlier this month. And he gives a speech, and then you hear a Q&A with Northern Miner Group President Anthony Vaccaro with some one-of-a-kind anecdotes from one of the great storytellers and thinkers and success stories in the mining industry, Pierre Lassonde. You're not going to want to miss it. I hope you enjoy it, and I will see you on the other side.
Thank you so much, my friend. Thank you. You know, the industry is full of, really quality people. And it's one of the joy of my life is to deal with, people like Ross. And I see earlier I was with John McCluskey. Rick Rule was here. Actually, I was talking with an investor like about half an hour ago, and he says, I got Franco-Nevada, and, because, and I thought he was going to say because of you. And he said, no, because of Rick Rule. Okay. Okay, I'll take it. It doesn't matter. So I think the reason I get a Lifetime Achievement Award is because I'm getting on with age. I think it's a requirement. The older you get, the better it is. I'll make it short. It's been a fabulous journey from the very beginning when I started, particularly with Franco-Nevada. Franco-Nevada was started as a bit as a lark in a sense that both Seymour and I used to go skiing in Nevada, and Seymour loves playing poker, and we would go to Nevada, and we decided to create a company to be able to write off the trip against taxes. And that's where the name Franco-Nevada comes from. And most of the money we raised was our own money. It was like $2 million. And once we raised the money, we said, well, what the hell are we going to do with it? Okay, we had no plan because neither of us are geologists or mining engineer. And the whole concept actually came about one day. I was in Seymour's office. We're talking, how are we going to create a company that, will survive, and that where we don't have to, continually raise money and dilute ourselves. And he came from the oil and gas business. And in the middle of the conversation, he just threw the idea, well, in the oil and gas business, we have royalties. Do you have any in the mining business? And at the time, I knew of 2 royalties. That's all I knew. And we said, okay, well, let's see if we can, buy one. And that way we'll have cash flow and we'll be able to survive. So the rest of the story, if I can wait to tell it, or I can, give it away. But like a few months later, I'm in Nevada. We have a contract geologist said, what else are you looking for? And I said, well, we're looking for royalties. If you see one, call us. And literally a month later, this guy's in his office on a Friday morning reading the Reno Gazette and sipping his coffee, 9 a.m. And on page 3, there's a box ad, royalty for sale, with a Houston phone number. And he calls up. And the guy said, yeah, I got a royalty. Where is it? In the Carlin Trend. Okay. Anyway, he sends me the documentation like by noon, and it was on the old fax machine with the thermal paper. I still smell the paper, okay? Like, I don't know if you remember those. And the property was smack in the middle of the Carlin Trend. And I noticed that the company office were in Salt Lake City. And one of my motto in life has always been Carpe Diem, seize the day, okay? And it's like opportunity shows up, don't let her walk out the door without you grabbing, opportunity. And at the time I had done a study. I said to myself and my partner, if we're going to be in the gold exploration business, where is the cheapest place on the planet to find an ounce of gold? So 6 months earlier, I had gone through all of the annual reports of all the companies, and the Carlin Trend was, in the early 80s, the cheapest place to find an ounce of gold on the planet. It was about $7.50. Canada was like $32. I mean, like, it was not even competitive. So anyway, I said, tell the guy to meet me 9 a.m. on Monday morning in Salt Lake. So I did all the work, and over the weekend, I fly over there. And Monday morning comes, I show up in the office, chit-chat for a while, and then I offer him. We had determined that the royalty was worth $1 million. So I offered him $500,000. No. $750,000. No. So finally, my big number, $1 million. No. Okay, so $1 million plus 1 million shares of Franco-Nevada. The stock was like around 65 cents, but it was only worth 30. So I figure I can give them a bit of stock. No. And I was like, what is going on here? And in talking with the guy, he comes out, he says, well, I have a $2 million loan. The bank has called the loan. I have 90 days to repay, or they're putting me into bankruptcy. So all of a sudden, I was like, okay, anything less than 2 million is not going to do the job for this guy. He's going to go bankrupt. If I don't pay him 2 million, then I have to go into the bankruptcy proceeding and I lose control of the deal because I don't know what's going to happen. So I redid the numbers in my mind, and I said, like, my first question, which became a mantra for Franco-Nevada for the last 40 years, is, give me my money back. Okay, I just wanted my money back. And I figured I was going to get my money back in about 5 years, which with the gold price at $350 at the time and the royalty, they were mining about 30,000 ounces a year. 5 years, okay, so the rate of return is like, it's still a pretty good rate of return. Fine. So I said, okay, you got a deal, but I got to call my partner. So I called Seymour, and I said, Seymour, I got good news and I got bad news. He said, well, what's the good news? I said, we bought our first royalty, and I think we're going to make 5 times our money. I was bullshitting him because I had no idea, okay? And he said, well, that's great, Lassonde. What's the bad news? We ain't got no more money. That was the entire amount of money we had in the treasury, okay? It was like, roll the dice. And he went on a tirade, okay? Like, Lassonde, what the hell are you doing? Anyway, on for 5 minutes. Finally I said, like, okay, you're done? Done. I hang up. I tell the guy, it happens that our lawyers are down here below on the first floor. Let's go down. We'll dictate the terms of the deal. I want the closing for April 17, which was my birthday, 1985. And you and I are going to go have a bottle of wine. We're going to come back, sign the deal. I have lunch, bottle of wine, sign the deal, and we're done. He said, yeah. I said, time is of the essence here. I'm okay with that. So we did that. We came back. We signed off the deal, shook hands. I got in a car to the plane. He went back up to his office. And I only found that out 3 years later. On the doorstep of his office was the operator of the property with his checkbook coming to buy the royalty. And that royalty turned out to be Gold Strike that has produced 50 million ounces of gold that has paid us over $1 billion US, and that's still going to pay another $500 million US. That was $2 million. Carpe Diem. Carpe Diem. And the rest, as they say, is history. But it took me probably 5 to 7 years to understand the power of the business model we had created. It was not immediately that we're like, oh my God, like Royal, this is the best business model on the planet, which I think it is. But the concept of optionality in the mining property is something that we investors in the mining sector, sometimes we don't understand how powerful it is. And just to remind you of that, when we bought Franco-Nevada back from Newmont in 2008, it had 10 million ounces of gold of reserve. It had 20 million ounces of resource. 10 years later, in 2019-20, those 10 million ounces of reserve were depleted entirely because we started paying dividend and everything else. It was all replaced, and we still had 10 million ounces of reserve, 20 million ounces of resource at no cost to the Franco-Nevada shareholders. And that's the power of optionality. Because once the operator has spent the money to build a mine, he wants to keep going. So he starts exploring along and he finds more, all at no cost to the royalty holder. And that is why when you look at how powerful the business model is, it's incredible. But it took me literally 7 to 10 years to understand that. And in the meantime, everybody thought like, you can't build a business out of royalty. It doesn't make any sense. For 10 years, we had no competitors. We had no competition. So we were able to acquire like an awful lot of land, which makes today the value of that optionality is absolutely incredible. It would make Franco-Nevada such a powerful company. Anyway, with that, I will terminate, and I'll let Anthony ask me a whole bunch of questions. Thank you.
Yeah, Pierre, you're going to make me just throw out these questions. You covered off a lot of it, and then we're going to go right to the back. Okay.
There's a lot to cover.
There's a lot to cover. We can spend hours on this sort of stuff. But I did go through the old Northern Miner archives, because when you were building this great company back in the 80s, I didn't realize how tough it would be. You know, we live in an Instagram time where if you don't take a photo of it, it never really happened. That wasn't the case in the 80s. But thank God for the Northern Miner, because we got a couple. We got a couple here. All right, look at this guy.
Oh, my God.
1983. This is when you're a fund manager, a Butel Goodman. Yep. So this is fund manager days. Do you happen to remember this shot?
I sure do. With Ned Goodman on the right, Peter Cavalti next, and both of them have passed away, unfortunately. Yeah, Rob Stewart, he was the president of Dynamic Fund, and myself. And we had, at the time, I was running the Dynamic Gold Fund, and for about 7 years, it was the best performing gold funds, not only in Canada, but in the world. And again, it was an interesting lesson because I made all the money out of about 3 stocks, okay? And everything else I bought, either I lost money or I treaded water. But having purchased the Gold Strike royalty, we had a bit of an insight as to what was coming. So we were big shareholders of Barrick very, very early on. And we rode that to success, immensely. And the other one was Echo Bay. When Echo Bay got spun out, I was one of the big initial shareholders, and that stock went from like $5 to $40. But literally, we made money. That fund made money on 3. And to this day, it's the same thing. Like, I love statistics because they're part of life. And when you look at the gold mining business, I mean, we have 1,000 of exploration company. Well, a lot of them will find 1 million ounce ore body, 500, 1 million, 1.5. If you look at the curve of ore body, gold ore body, 90% are less than 1 million ounces. So yes, you're in there, you're going to have an ore body. Are you going to make money? No. Okay. You have to be in if you want to really make money, you have to be in at least 3, but more likely 5 to 10. Once you get over 10 million, now you're in business. Okay. Now you're in the top 5%. You are in business.
This is a Lassonde rule of thumb.
Yeah, it's statistics. It's it's real life.
Let's go back a little bit. You were at Bechtel to start. You were a construction engineer, correct? That was the thing?
No, actually, I'm an electrical engineer.
Electrical engineer.
Yeah. So Never did any.
As the legend goes, you got bit by the bug with a junior mining stock. Well, that was while you were doing engineering at Bechtel. Is that right? It's
while we were building a mine in Arizona. Bechtel had bid firm price contract in 1973 to build it was City Service was the owner in Pinto Valley. We bid $95 million. I was the chief cost engineer for that project. And I got going with I got to be friendly with the chief geologist for City Service. And he and I started speculating on, gold stocks. And as luck would have it, the first one that I bought, and I even can't remember the name of it, I made 10 times my money. And I thought I was God's gift to finance. Okay. Oh my God. You're 20 some years old and you do that, $500 turns into $5,000. I was earning $12,000 a year. Okay. That was huge. And the next one, I lost everything. And that was my price for education. But I got the bug. And I never stop after that.
Well, the reason for asking is twofold. One, I like that's where it started in terms of getting the bug that I think everyone in this room probably has. But the second thing is, clearly gold was your calling. But this was before you had heard that calling when you were at Bechtel. But were there things about that point in your life, about that career? It's still very rigorous. You did your engineering training, some rigorous training. Were there aspects of that part of your life that fed into your future success?
Well, the first thing it taught me is that I knew nothing about mining. And so after I left Bechtel, I went to work for Rio Algam for a number of years. And that's where I did my 10,000 hours. Okay. I tell young people, if you want to be successful, yes, you have to have ambition. You have to work hard, but you need your 10,000 hours so you know what the hell you're doing. And I was really fortunate at Rio that one of the old guys, one of the senior vice president who was on his way out, and he had, he was a South African. Anyway, he took me under his wing. And at lunchtime in the summer, we'd go a park bench, we'd have our thing, and he would teach me, okay? and then when he went on mine visit, he would take me with him. And he would show me, this is the way you do it. You don't do it this way. And this is... And I learned in the space of 4 years I was with them, I did my 10,000 hours. And that's when, after that, I went to Bechtel Goodman. But then I was ready. At least I understood what the heck I was buying. Okay, before it was just pure luck.
No shortcuts. You did your 10,000 hours.
No.
You remember these gentlemen, of course.
Of course.
So, I just want to set it up this way, especially for the younger people in the audience. You could argue that Gold Strike built 2 legendary companies. Barrick was not Barrick until Gold Strike. It had Camflo and it was interesting, but it was not. This made Barrick into what Barrick was, and it made Franco-Nevada into what Franco-Nevada was.
100%.
And you got to know these 3 gentlemen pretty well. Yeah. Would you like to go through who they are, maybe your impressions of them and what it was like
on the left, of course, Peter Monk. In the middle is Bob Smith. Bob was the salt of the earth. And then on the right, Brian Meikle, the geologist who discovered Gold Strike. Bob was an idol to me. He was a bit of a mentor, but he was the ultimate understated individual. And when they drilled Gold Strike, they drilled a hole. It was 1,000 feet of 0.3. He didn't believe in it. So he drilled 100 meters away another hole. It was 1,000 meters of 0.3. He didn't believe in it. He put out a third hole, 1,000 meters of 0.3. And He said, there's something wrong. Then he went in the other direction, same thing. And then after he did that, I figured like, just if you do a round number, there had to be like 5 million ounces. So I barge in his office and I'm jumping up and down. I mean, like, this is 1987. It was incredible. Like, these holes were absolutely mind-boggling. And he looks at me, he says, well, Pierre, it's encouraging.
The king of understatement.
He was the first one who ever told me, under promise, over deliver. And that's what he did his entire life. He was absolutely the salt of the earth.
He lived by his word, and an absolute legend and member of the Canadian Mining Hall of Fame as well. All three of them are. And then Brian Meikle, of course, you have, I think, the greatest Brian Meikle story. I put it up in the title, but tell the audience the Brian Meikle, how he fits into the legend of Franco-Nevada.
Yeah. So Brian, again, was like, he worked with Bob Smith his whole life, and the two of them were the ultimate understated individual. So after the Gold Strike discovery, the Franco-Nevada stock goes from, 60 cents to $17. And Seymour and I at that time owned 20-some% of the company. So we figured we're going to, sell Franco-Nevada and do it again. And we started Euro-Nevada. And so we moved some of the exploration properties that we had acquired into Euro-Nevada, and we're just going to do it again. And so we hired Bill White, who was at the time with Merrill Lynch, to sell the company, and we were due to sign the papers on Friday. And on the Thursday, I had to go to a Barrick mine opening, the Holt McDermott mine in Northern Ontario. And at that time, I was totally insufferable. I had like the gold hat, like the big gold buckle, and was like strutting along. I mean, I've made it, okay? And I bumped into Brian Meikle. I said, Brian, guess what we're going to do? We're going to sell Franco-Nevada. We're going to stuff our pocket with money, and we're going to do it again. And he looks at me and he said, you don't know what you're doing, do you? And in my mind, I was like, no, I do. And he goes, Gold Strike is not the discovery of a lifetime. It's the discovery of 3 lifetimes. And he just turned around and left, like totally dejected that I would even think that way. And you know what? For the rest of that afternoon, all I could think of is his words. That night, I couldn't sleep because I knew he was right. I knew the numbers in my head, deposit of that size. And at that time, I thought that Gold Strike would be 20 million ounces. Turned out to be 50, but I knew it was 20. And that morning, the Friday morning, I come in before we were due to sign the paper, and I tell the story to my partner, and I said, Seymour, he's absolutely right. You and I are the two dumbest bastards, because if we're going to build a company, there's not a better asset to build a company than this asset. And that's the day we decided to build Franco-Nevada. And it was because of him.
Amazing. Some of the most pivotal moments in corporate history aren't things that happened but didn't happen.
Carpe Diem, 30 seconds. I mean, that whole conversation was 30 seconds.
But a lot of people that are in your situation, the ego would have blocked that. Who is this guy telling me, this geologist? I know, I'm the big entrepreneur, right? So, it's also credit to you that you were allowed it to resonate. That was from the Northern Miner at that time. So that documented a near almost mistake. But it didn't happen. But it was even being reported on that this Pierre and Seymour were ready to sell. 2001. Now I highlight this one because of all you did for the Canadian Mining Hall of Fame. I also have your induction in here, but some other legends over here that are also in the Hall of Fame. Marsh Cooper. These are the Falcon Bridge crew. Was this just kind of a social running into them, or was there business with Falcon Bridge at that time?
No, it was just a social running. I knew Marsh quite well, and again, like an unbelievable individual who really, created Falcon Bridge from, and he was there for such a long time. But he made Falcon Bridge. So he was, and Oyvind as well. I mean, those were and Barbara was the wife of Ted Yates, who we knew as from a long time. Yeah.
I also put this in because I think it's a great launching pad. You've been one of the strongest advocates for the importance of Canadian mining companies to remain strong, and that I tip my hat to you because you're always brave and you're out there and you're in the general media. Talk to us a little bit about why that's so important to you. Where does that strong desire to preserve, why does it matter to keep head offices in Canada, and why does it matter to Pierre Lassonde?
I do lament immensely the fact that in the early 2000s, the government at the time let, our largest mining company leave. If you think of not only Falconbridge, but Noranda, Inco, Alcan, all were taken. And if you go back to the reason why it matters, Inco, by the 1980s and 90s, was the number one battery company in the world. It had, in terms of battery knowledge, R&D, Inco was the number one company in the world. Imagine, if we kept that knowledge in Canada. And it's not just the head office, but within the head office, you have the research and development department, the creativity, the exploration department. And all of these companies also, they help the junior because in their budget, they keep 10-20% to, selectively do investment in the junior mining company. And also they help the juniors with their knowledge because they're able to, maybe take a 10% interest in a junior, but they will give them the people to help them run their exploration and because they have an interest. When that goes, one of the reasons why our juniors have suffered so much over the last 10 years is because there's no big companies left. There's none to help them. And I do lament that. Canada, with the second largest land mass in the world, we should be the biggest mining, country in the world, ahead of Australia, ahead of anybody else. We've got great talent. We've got great schools. We've got, some of the best banks, brokerage firm, we do more in that respect than any other country in the world. And yet, in terms of very large company, we're left today with really only one, and it's Agnico Eagle. Even tech is, a remnant of what it used to be. And it is, now, the one thing that I do, that I want to underline is that in terms of the times that we live today, the fact that governments for the first time in 50 years are supportive of the mining business, we haven't seen that in such a long time. And the fact that the public acceptance of mining has turned around completely in the last 2 years. And again, we haven't seen that. I mean, before, you said, oh, I'm in the mining business. Oh, my God. You were like a turd on the floor, okay? It's like... Now, today, the concept of critical metal, we need copper. Well, of course we need copper. I mean, to my mind, copper in particular is the number one critical metal in the world because without copper, we have no electricity. And without electricity, we're not going to be here. There's no lighting. There's no air conditioning. There's no elevators. You cannot create a city today and live in the 20th century, 21st century without copper. And it's just going to get better and better for copper because today, 85% of terminal energy is carbon and only 15% is electricity. In 20, 30 years' time, if we want a green world, that has to be flipped around entirely. We have to have 85% electricity and only 15% carbon. And to do that, we need a lot more copper. So copper is an absolute essential element of what the world needs. And I think the public has figured it out and government has figured it out and is supportive. And that is a big change, a huge change in attitude.
What's also brilliant about your investment thesis is going back in the late teens, a lot of people saw it as an either or when it comes to oil and gas or copper and metals, whereas you didn't see it as either or, you saw it as both. So you're heavily investing in oil and gas because you knew that those numbers, that it was going to take way more to do it, but at the same time taking copper because, both sides can be done. Do I have that kind of right about your oil and gas thesis? Because you do, frankly.
Yeah, I mean, it's the thing with oil and gas is that the infrastructure that has been built around the world to distribute energy, oil and gas, you're talking trillions of dollars to replace. And you can't do that in the space of 1 or 5 or 10 or 20 years. It takes time to build this infrastructure. So you do need the oil and gas. And to be honest, that molecule of carbon, nothing so far that we know can replace that molecule of carbon in terms of efficiency, in terms of distribution, storage, and energy. There's nothing in 1 gram of petrol that we have today that is anywhere near as efficient, transportable, storable for the price that we're paying. And that's why it's going to be used for a lot longer than anybody thinks. We all wish that, green energy would be very cheap easily. Well, first we have to build all the network, which is, not done. I mean, how many people live in New York City or Paris, for example, where the buildings dates from the 19th century or the 18th century? Try to rewire that for, cars, okay? You have to redo everything. It takes time. It's doable, but it takes time. And for the countries that are in development, the carbon energy is cheaper, easier, faster. And at the end of the day, for them, it's a better investment to get their people out of poverty than trying to build, alternative energy, because you need two of everything.
Very eye-opening when you see the stats on energy in, energy out, and you look at oil and gas, and the amount of energy that goes in to get the energy out is very low compared to solar and everything else. Now you're starting to rack up some awards. Now we're into 2004. You win a gold medal for the Professional Engineers of Ontario, the chair of the World Gold Council. Any big memories from here? Defining moments, core memories?
Yeah. So I was, when I got elected to the chair of the World Gold Council, the first thing that I said to the board at the time is that I wanted to create an instrument that was going to be equivalent, making gold equivalent to the US dollar in terms of being able to be traded 24 hours a day, anytime, anywhere in the world. And that's how we came up with the gold ETF that we created in 2004. And it took us almost 3 years to get it through the SEC. When they found out, for example, that Rothschild, we had a morning fix and a afternoon fix for the price of gold. Well, you're fixing the gold price? Oh, my God. That was quite something. But anyway. And then the second thing is I said, at the time, the central banks were big sellers of gold. I said, we got to change that attitude. We got to teach the central banks that, it has to be part of your reserve. And I said, we're going to start with China, because China had zero gold in their reserve, and they were accumulating US dollars. So we go to China, we meet with the chairman of the Chinese central bank, and, I do the whole expose, why they should own gold and everything else. And at the end, I said, well, are you going to buy? Oh, no, we're not buying. Well, and then this was 2003, gold was $350. Too high. Well, yeah, I know last year was $250, but if you wait, next year it's going to be higher. Oh, no. Okay. So following year, 2004, gold is $450. Okay. So we go back, and the first thing he goes, Mr. Lassonde, you were so right. So we go our whole expose. Are you going to buy? Oh, no, too high. So 2005 comes around, so we got to go back. And then 2005, gold was $550. Same thing. We walk in there. Mr. Lassonde, you were so right this time. We go to the same thing. Are you going to buy at the end? No, too high. We did this for 4 years in a row. For 4 years, they didn't buy. They didn't start buying until 2015. There goes, China will do things in Chinese time. But today, as you know, they are the largest buyer of gold in the market. For 2024, approximately half of the gold produced during that year was bought by central banks. The official number is below that, but the unofficial number is probably closer to half. And this year will be about the same thing. And that is one of the reasons the gold price is where it is. Because, again, when I was chairman, I asked one of our staff to do a study, elasticity of the gold price vis-a-vis purchase. And for every 100 ton of gold purchased by central banks or sold by central banks, it affected the gold price by about $50. So you imagine, 2,000 ton, well, that's $1,000. Okay, so I think the gold price would probably be closer to 3,000 than where it is if the central banks were not purchaser of the gold price.
Wow, great little.
Yeah.
Now, this one, you once said that next to your family what you love the most is creating wealth that can be shared by all and giving some away. Mm-hmm. I chose this one because this is the one on the left there with the young woman. How to do with your U of T donut. You've given so much to many schools, your Colton Polytechnique, your alma mater, Utah School of Mines, and U of T. The second one, I couldn't find where that was from. I found the photo. Is that Beaux-Arts? You did a lot for Beaux-Arts in Quebec City.
No, this one has got a great story. So my first wife went to a school run by nuns. And before she passed away, she promised the head mother that she was going to help them fund an expansion of their high school. And unfortunately, she passed away, so it was left to me to go and get the deal done. So I called up the head mother and said, well, you can come, to see us next Tuesday at 10 o'clock. So I showed up, and they'd set the stage for me, okay? They know how to raise money. So she was standing here, like on a pedestal or something, and she had like Mother Finance Econome here, and she had Mother this there, and then they were all sitting there, all in their full regalia, the whole bit. And they put me on a chair for a 2-year-old, like right there, okay? Now she opens up and says, we're really sorry about your losses. We pray for her, and like on and on and on. And then silence. So then it was for me to say something. So I go, well, thank you for, all you've done and, your prayers. And we'd be happy to contribute $500,000 to your new school. And then silence. And she turns around. Then she turns around. And then she looks at me and she says, well, Mr. Lassonde, your offer is very generous, but it's not God's number. What can you say? Okay.
Can't argue with God.
Can't argue with God. And then she goes, well, we will ask the Holy Spirit to pray with you. And you come back in a week, and we'll see. And the Holy Spirit, knew how to use a cell phone, because God's number was $1 million. So she got $1 million out of me.
And even at this point in your career, with all the high-level global deals you've done, you can still learn a lesson of a negotiation from a nun.
Yeah, it was not God's number. There you go.
2003, member of the Order of Canada, 2013, Canadian Mining Hall of Fame, and then more recently, officer of the Order of Canada. You've had a lot of accolades in your life. You're getting another one here tonight. That's the occasion. How do they speak to you, these accolades? What are they markers of? The emotional reaction to them.
I'm very grateful for all of them, to be very candid. Of course, the Order of Canada is incredibly meaningful. For 5 years, I sat on the board of the Order of Canada, handing out the orders. And when I saw the profile of the people that came to be, made member of the order, you realize the incredible quality of people that we have in Canada. And the other thing that I did when I was there, I went to every dinner. So after the ceremony, the Governor General would have a dinner, and I went to every ceremony. And it's interesting that everybody who received the order, every one of them, how humble we all are, because they all have the same comments. What am I doing here? Compared to these, I'm a fraud. Okay, some of these people, they've done so much, and I've done so little. And every one of them has that same attitude. And I find that absolutely, really incredible. And yet, they were all very incredibly deserving. And we have another one here today, and it's Ross Beatty, who's also a member of the Order of Canada, and very deservingly so. And I was actually happy at the time. I was on the board of the order when he received it, so I was really happy for Ross. But they're all meaningful. I mean, coming from the highest award is always the one that comes from your own people, okay? They're the ones who vote for you, who say, you deserve this. And I was telling the story and I tell you what they mean a lot, why they mean so much. Last week, I was in Whitehorse, Yukon. We just bought a project there called Carpe. And in the Yukon, like other places in Canada, the First Nations have a huge amount of say in whether or not you're going to be successful or not. And one of the meetings that we had was with the First Nation whose land the project is on. And we walked in and they had a file, the chief was there, and they had a file like that big. And they said, well, we've done our due diligence, and we really like the fact that you're involved. We have looked at everything that you've done, the integrity that you have conducted your business, the success that you've had, how you interact with people. And we only have one question. I said, well, what is that? When are you going to start? And that means everything, okay? To have their support. Without that support, there's no way we could have done this. And it's all because of, the awards means so much because it tells people that, you not only respect them, but you work with them, that you can be trusted and you trust them. So that works.
Yeah, excellent point. And I think, from the outside, for me personally, but in talking to other people, when your name comes up, which is quite often, it's also that joie de vivre that you have, right? This energy that is Pierre Lassonde that doesn't seem unending. How do you continue to generate this? Can you talk about that in the context of your investments? Because Forte with coffee, but also Gold Candle, you're still supporting a lot of the juniors and you're still very engaged in that. Does that help keep the fires burning?
I just love the business. I love the people, and I love creating wealth and sharing it. And to me, in my speech to the Yukon Geoscience annual meeting, and the premier was there, I made the point that, coffee, just the reserve that we have now, which is only 3/5 of the resource, will produce for the Yukon government over US $1 billion in taxes. Well, you divide that by 48,000 people, you're going to make the Yukon GDP per capita the highest in Canada, period. And it was like, wow, we never thought of that. Okay, well, guess what happens if you have two mines? Okay, so this is the kind of, thing that I love to do, to focus people on wealth creation, because that's what it's all about at the end of the day, is raise our standard of living and make Canada the best place on the planet.
Excellent. Well, Pierre, you're always generous with your insight, with your time. Ross alluded to it so well in his amazing opening remarks. We thank you for being here. It's cocktail time. Let's hope that Pierre stays and has a few drinks and shakes a few hands if you can. I know you're in high demand. Please, everyone, join me in thanking Pierre.
Thank you so much.
A big thank you to Vista Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit vistagold.com. And a big thank you to Pierre Lassonde, this year's recipient of the Northern Miner Lifetime Achievement Award, for showing up in London and sharing all of those great stories that you just heard. And thank you, dear listener, for continuing to support this program. And a big Merry Christmas to you and a Happy Holidays. And I wish you a wonderful holiday season. We're going to continue broadcasting next week with another fantastic gold panel from the International Metal Symposium, so you're not going to want to miss that. Hope you have a wonderful holiday, and we will see you next week. Until next time, take care.